Welcome to week 57. Michelle, how did we get to week 57? I have no idea. All right. Anyway, so I'm here to host this weekly roundtable. Remember, money is not the most important thing in life, but it is like oxygen on the gotta have it scale. And so what we're here to do is help you not only earn more money, but do what you love and have a great quality of life. So I'm from Qnity here, and what we're here to do is make what's complicated, confusing, and overwhelming, and help you create a clearer path to financial prosperity, or whatever prosperity means to you. Moving into an era where simple, visual, and actionable is really what creates great change. Last week, we had Danny Everson from Clementine's in Denver. She had some great shares. It was a session that had a focus on growth. She had 76% growth. We went through some of the things she did. If you didn't see that episode with Danny last week, it is stored on our YouTube channel and our Plan for Profits portal. Check it out. She did a great job. There was also quite a bit of discussion about hair and skincare and spa services, how they relate with each other. This week, I have the tax tiger, Chris Wittich. And you know what, Chris, I may have mispronounced your name again here. I'm sorry, Wittich. Excuse me. So my apologies, Chris, but look forward to having you. We're going to take you off mute in a little bit here. Just a few updates. If you're going through our profit guided group right now, we just loaded to the portal a template as it relates to the concept of zooming in and zooming out. And this is a template for a one-page executive summary to take your monthly numbers and bring it down to one page to really zoom out and look at the big picture. The other thing that we loaded on the portal, if you're going through our program, is an updated list of benchmarks based upon pretty much every line item on the P&L. So if you're part of that group, watch for those templates to be stored on the portal. Also, past recordings of these sessions are on the Plan for Profits portal, as well as the YouTube channel, and each episode has some nuggets of wisdom, of which hopefully we'll have for you today. You know, last week, we spent some time talking about September, and September being what the Wall Street Journal called in this article, the real new year. It's more than just back to school. It's really a time to look at your routines, consider changes, join in a gym, and the applications in the world of work and as business leaders is multiple. And so we're going to go a little deeper into that in a moment here, because September is a great time for planning, budgeting, renewal. One British survey showed 69% of respondents believe small improvements in September are easier to achieve than New Year's resolutions. So what really struck me, we're talking about this as a team, and what struck me is we've got a great tool that can be used in a variety of different ways to help you really put your last 4 months on steroids and be super focused going into the end of the year. And it's something called the 3 C's. If you're familiar with Qnity, you've been through our program, it's in the focus module, and it's a simple process to create changes for yourself, your staff, your clients. And the 3 C's are closure, clarity, and confidence. Now, it's a simple and visual focusing system that really is time-based in the sense that you do this occasionally throughout the year, and this is a perfect time to do it as a leadership team, and then also with your team. I'll give you some examples. And I love this quote: you can't depend on your eyes when your imagination is out of focus. So this is all about a focusing system, and I'll give you a brief introduction on it. To really go from that squiggly hat. I know certainly for me, I've got so many things going on right now, and I love this time of year to step back and get refocused. And today, we're going to go deeper into this. I'm just going to do a very brief overview right now. And then at noon Central Time on the school roundtable, Carrie Perkins is going to be my guest. And we're going to go through all of the C's, and we're going to do an activity. So if you have time to join us today, if you want to double dip, you're welcome to. Closure is really about creating space so you're ready for what's next. It's about getting unstuck. It's about certain processes that allow you to move into a state of greater confidence because you're super clear. Closure helps you get unstuck. It helps identify what's holding you or your team back. It allows you to focus on what's important, allows you to make space for what's next. And it's key to living a prosperous life. So closure can come in the form of people. So you couldn't get closure with a key employee, that conversation that you've been avoiding, that member of your team that needs to be liberated. Or it could be closure in terms of doing more things as it relates to the school. Projects. It's a great time. I was talking to someone earlier today. They're in the middle of a software conversion, and each season usually is a good time to start and finish a project. And so in their particular case, progress that we're making on the finance function of the business is still going along, but at the same time, they're doing a software conversion. So they're very much looking forward to getting closure on their software conversion. Stuff, it's also a great time to declutter, and it's also a great time to look at your beliefs. Now, the 9 grid is a great tool for this, and it's a very simple activity. We'll go through this at noon. You can use a 9 grid as a mind map, and we've got some examples of people. It's going to be hard to see the print, but you can see the smiley face there because she got closure. This is someone that's quite artistic with our 9 grids, and she went through different things that she felt needed to be eliminated and get closure on, which is another reason I'm bringing this up today, is because it's a great team activity. Is do a 9 grid, put in the center where is closure needed, and help guide members of your team to create closure for them so they can move forward with confidence and clarity. Love this one, financial limiting beliefs. We've done this so many different times with teams, is to really get things out of their head and get it down on paper, which helps create great change. Now we have a storyboard 9 grid that really helps with this process. And this is what Carrie and I are going to go through today, which also gives me an opportunity to teach you something else real quick here before we bring in Chris. And one of the things about the 9 grid is the 9 grid is used in multiple different ways. And it's used to plan, problem solve, organize, create. And the image on the screen right here is a mind map. You put the topic in the center box and use the outer boxes to create solutions, things that come into your head, you get them down on paper, but it's very much using the center box in the form of a storyboard. 9 grids can also be used as a step-by-step, great for process, whether it's a client experience process, technical training. But the thing I want to bring up right now, and many people don't use a 9 grid for this, is to use it as a storyboard, the column approach. And so here's an example of a 9 grid from our money course, where we have 3 columns. And so anyway, here's some more 9 grids. These are actually storyboard 9 grid. I'm sorry, mind map 9 grids. So anyway, when it comes to the 3 C's, as we look at going into the last 4 months of the year, the second new year, it's a really great lens for which to look. It's a great system for leadership team and individuals. So I wanted to mention that. And again, I love this quote: if you want to fly, you have to give up the things that weigh you down. So certainly the 3 C's can help you do that. So get closure and get unstuck using a 9 grid. We're going to go through that a little bit more at noon today. Also in your invite, you should have gotten a 9 grid that had in the center light bulb moments. We hope you get some light bulb moments today. We have an amazing brain trust. We're going to welcome someone new to the brain trust today, Chris. And so anyway, without any further ado, Chris, let's get you going here. So how are you today, Chris?
I'm good. How are you, Tom?
Good. Thanks for joining us.
Mm-hmm.
You're the tax tiger.
Absolutely.
So tell us all about tigers and how you became the tax tiger.
It sort of started in high school. In a 10th grade biology class, there was a tiger on the cover of the textbook, and we got new textbooks that year. And sort of started from there as the ravenous tiger for a long time. Wasn't really doing very much taxes in high school, so that wouldn't have made sense. But sort of into college and then into work, people call me a little bit more the tax tiger, but ravenous tiger works for me as well. I just like tigers. They're orange. They're very cool. So
Well, you have
I'm
that
not going to
one.
blur my background. This is going to
Yeah,
stay.
yeah, you do not want to blur your background. All right. So um, now I met you through a colleague of mine, former colleague of mine, Scott Schneiderman, who
Hmm.
we've collaborated with for probably 20 years. Great guy. I thought I saw Scott signed up. I don't know if he's with us today or not, but if you are, Scott, use the chat. And Scott's an amazing guy. We worked together at Jude. He was the CFO, and we've done a bunch of stuff together through the years. And I've been in touch with him, and he's part there. There's Scott right there. Scott's part of your firm, but he's more in the wealth management side.
Yeah.
And so you're part of a CPA firm. Why
Hmm.
don't you just give us a quick synopsis of your CPA firm and then your expertise with salons?
Sure. So our CPA firm is headquartered in Minneapolis. The office I'm otherwise normally in is near the Mall of America, sort of the airport, that area. We've got probably 120-ish people now, 120, depending on the time of year. And so I'm a partner there, and I work with a couple different areas, one of them being salons. And certainly in the last, 15, 18 months with COVID, the salons and the sort of the COVID relief things that ended up impacting salons took over a big role for sure. So I've been there about 15 years and, helping people with tax planning, tax returns, all the COVID relief lately. That seems like it pretty much rules my life, at least for this year. So that's what I do. But I'm, mostly work from home these days. I'm sure I'll get back to the office here, hopefully sooner rather than later.
So we're talking about, I'm not sure if I got a number from you, how many different salons you've worked with, but it's a lot.
Yeah, it's probably close to or over 100 just this year, specifically on PPP, ERC, um, especially. So some of those have just been on that kind of stuff, and others are, tax clients, tax planning clients, have been clients for a while. So sort of a combination of the two. It definitely exploded with some of the COVID issues and PPP forgiveness and these ERC credits.
So I had, um, I had a conversation with you and then someone else in the pro beauty space that is kind of hitting us over the head in terms of ERC. And I heard from you and someone else about how so many people, or there's so many myths and misunderstandings still about ERC. And even though we've talked about even though we've talked about ERC on these roundtables, everybody, I just felt it was important to bring Chris in to just hit us over the head, because there might be one of you that still have a six-figure opportunity. And that would be wonderful, Chris, if one person on this call has their eyes opened and take action. So what's going on with this? I mean, ERC, it's been out for a while. Why is there so much, so many myths and confusion and lack of skill in this area?
So it has been out for a while. I would say it's sort of been out since the end of December, essentially. Um, but a lot of the answers, there were a lot of unanswered questions. A bunch of those got answered just this summer. So I know for us, you know, I spent an incredible amount of time reading about it in January and February, but we basically intentionally did not work on them until this summer when we finally got some more answers. So at this point, there's a few unknown items, but very few. And the vast majority of it is known and understood, but it's wildly complex. So it's not surprising that people maybe don't get it or they're missing a little part of it. But at this point, we've started doing the ERC studies this summer. We have completed probably in excess of 50 for salons specifically. We've done another 50 for other businesses. And I know my firm has got, probably another 50 that are in the process right now. So they're still working their way through all the calculations and everything. So it's absolutely an amazing opportunity, especially for salons, because it's many times it's very obvious that a salon qualifies.
Mhm.
So if you had 10 stations and you could only use 5 or 6 because they had to be 6 feet apart, or you were not able to offer certain services if you had, massage or facials or stuff like that, if those types of services were prohibited for a period of time or restricted or you weren't at full capacity, I think that's a slam dunk case. And the calculations get complicated when it relates to you can't overlap with PPP. It's a person by person thing. It's very complicated. I'm not going to say that it's easy to figure out, but um, I think the opportunity is definitely there. And what I'll say is from the ones we have completed, it's I use the PPP as sort of a good metric for sort of how big the business is, how much wages there are. So for every 100 grand of PPP, definitely I would say the blue states had more restrictions or for longer periods of times. So I would expect to see, for every 100 grand of PPP, I would expect between 100 and maybe up to like 180 for ERC. And that means like if you had 100 grand PPP and 100 grand PPP2 and you're in a blue state, I would be looking at, between 100, 180, I think is a reasonable range to expect for your ERC outcome. And I think just some people out there aren't aware, or they maybe did it for 2020 and somebody's telling them they can't do it for 21 because they got PPP2. That's just not correct. The calculations and the overlap are incredibly complicated, but there's also incredible flexibility, which makes it more complicated, but it also means that the result is going to be better if you know what you're doing, because there's incredible flexibility to sort of allocate the wages in a way that's most advantageous to you, the business owner, the salon. So it's definitely a complicated area, uh, but if you haven't done it for 2020, or somebody told you you can't do it for 21 because you got PPP2 or something, I would definitely revisit. As Tom said, if you got 100 grand PPP, even in a red state, I would expect you to be looking at 50 to 100 of ERC. And if you're not seeing those kinds of numbers, I would absolutely circle back and take a closer look.
Linnell asked, where do we learn about ERC?
Well, ERC is a mess. Certainly, the IRS has published some guidance. It's a little hard for people to read. The tax code is even harder to read. I mean, you can reach out to me. We've put some stuff on our website, but certainly I can point you in the right direction and just think through what those restrictions might have been for your business and just see what you've already done. My one bit of advice that you may need to act on quickly is if you're doing a PPP2 forgiveness application, because I know a lot of people got PPP2, they're probably looking at starting to do their forgiveness. You really want to keep two things in mind. You want to use your full 24 weeks and include all the non-payroll costs that you possibly can. If you do those two things, you will preserve more of your wages for ERC for, when you eventually get to that ERC for 2021. But those are really the two key things for PPP to set yourself up for success on the ERC. So that would I would think would be the first step, is just being sure you're doing that correctly, because
Okay.
that ends up happening before that ERC most of the time.
So we had Don ask the question, is that the payroll tax credit?
Yes. So the ERC is the Employee Retention Credit. That's what it stands for. It is a payroll tax credit. However, it has absolutely nothing to do with payroll taxes. which is one of the reasons it's very confusing. It's based on the wages that you pay people during a period of time when you qualify. And it doesn't matter how much your payroll tax liability actually was, because this has nothing to do with payroll taxes. They just choose to administer it through the payroll tax system. But the end result is that the IRS sends you a check. So if you get, 120 grand of ERC, you will get a check for 120 grand. So it's not like income tax credits, which sometimes get hung up in your tax returns, and it's not really dependent on your payroll taxes at all because it's fully refundable. So it's a very strange way that they administer this, but yes, it is, technically a payroll tax credit.
Scott Schneiderman, do me a favor. Why don't you put in the chat Chris's contact information if people want more information about this, okay? What is the timeline for the IRS to send out a check?
A long time. So we've filed a lot of these for people, even dating back to, the first ones were probably getting done in April and May, and basically nobody has seen a check yet. I have a lot of contacts sort of across the country that have talked to about this. Basically, nobody has seen a check. The IRS recently announced they had in excess of 1 million 941s they had not processed, and that was delaying the several hundred thousand amended 941s that they also have not processed. So that's a very good question. I don't think anybody knows the answer to that, but I would expect, 3 to 6 months. The hope is that this fall, the IRS starts getting caught up and processing these 941s and kicking out refunds.
Ashley just put in the chat. Thank you, Scott, for putting Chris's information in there. So Chris will be happy to help you, as will Scott. Ashley just put in the chat that she got her first check this week.
She's the lucky one, for sure. And I mean, that's great news. We did have one other client get a check like last week, so maybe it's starting to come. But I mean, we have hundreds of checks that are owed to clients, and we've seen, like a couple. So it's
God,
hopefully soon.
using your parameters, so a $500,000 PPP is the equivalent of perhaps a $500,000 of ERC, depending on what state you're in. These are big,
Yeah.
big dollars.
Absolutely.
I was reading an article about, you should buy a lottery ticket, Ashley. I love that. All right. Chris, I was reading an article about some myths. Let's go through a few of them, okay?
Okay.
You and I didn't talk about this, but you're like an encyclopedia. There's no question. You really understand this stuff. Myth number one, if I was eligible for the federal relief credit, then my accountant or bookkeeper would have informed me and applied on my behalf.
That is not, I mean, they should have informed you and helped you do it, but no. The 941s are how these get administered.
Mm-hmm.
You have to sign the 941. And also there are a lot of questions in relation to, relatives, in relation to how the PPP forgiveness was done, in relation to the restrictions and stuff. It's not something, I have Salon clients. There's not a single one where I just did it without talking to them. That would be impossible. So nobody's doing it for you. And ultimately, you're going to have to sign it and then mail in these 941s.
I'm hearing a lot of questions about really a lot of skepticism by experts in this, that most accountants really are doing this right. I'm hearing, and this is not to be a knock on anybody's accountant, but I'm hearing that there's a lot of errors and mistakes happening. Are you finding that too?
Yeah, I think the biggest error is probably just not doing it at all.
Okay.
Certainly there are nuances, there are issues with owners. So a big one that got cleared up this summer was nobody could exactly figure out what the deal was with owners. Do the owners qualify? So you own 100% of the salon, you pay yourself a W-2, do you count? The answer is no. That is very clear now, but that wasn't clear until I think that came out in July sometime. So there are some things like that that got cleared up this summer, but I think the biggest issue is people not properly identifying when they should go ahead and do the calculations. And that's, I mean, that's the biggest mistake of all, is not doing it. That's far worse than doing it, but perhaps getting the wrong answer.
Another myth is a salon must show a 50% loss in revenue to qualify for ERC. True or false?
False for sure. And I would say most of mine have not had that kind of a decline in revenue. Some did. I mean, the ones in New York and California, they've been closed for like months and months and months. The revenue went to almost zero. But I would say the vast majority are not qualifying based on gross receipts. They are qualifying based on the restrictions when they were actually open. And if that's how you qualify, it doesn't matter how high or low your gross receipts are. If you were at 50%, 75% capacity, and you manage to grow revenue, congratulations, that's super. But you still qualify for ERC. It is not in any way like needs based if you were partially restricted by the government order.
Next myth is if I received PPP, then I'm not eligible for ERC.
Yeah, and I think that leads to the missing it entirely. I think those two definitely go together. I mean, that's definitely false. The PPP and ERC, you cannot use the same wages for the same person at the same time. But you have tremendous flexibility to pick and choose. So if you think about, I got PPP in May, I've got 24 weeks. I'm going to, use some of my payroll for that forgiveness. You're going to have time before you got PPP that definitely qualifies. Almost every person on this call is going to qualify for ERC in March of 2020 because you didn't have PPP yet, and then you got closed and you paid people. So that's a slam dunk qualify. Usually it was only one paycheck before basically you furloughed everyone. But there's also going to be a period of time after the PPP. And during the 24 weeks, you only have to use, or I like to say, taint the wages with PPP forgiveness, but there's going to be excess wages there. So the priority is first you do PPP, but then you get to pick and choose how you're going to use the wages for that after the fact, which is amazing. And then the leftover, you can still claim ERC on the leftover. So almost everyone has assigned both PPP and ERC wages to the same people in the same year. You just get to pick and choose sort of how much in a way that it's most advantageous for you.
Scott Schneiderman, thank you for recommending Chris. Chris, you explained this stuff nice and concisely. I appreciate that. And I'm sure the participants are picking up on that. A couple more myths for you.
Sure.
Next one is I can only receive a maximum of $5,000 per employer per employer for ERC.
So I would say that's kind of true. For an employee in 2020, the max is $5,000. But that same person, you can do it in 21, and it's done each quarter. So 2020 is one period, the entire year is a period, and the max for a person is $5,000. But first quarter, you could get another $7,000 for that same person. Second quarter, you could get another $7,000 for that person. Not everyone's going to qualify for both quarters in 21, but certainly like for one person, you could in theory get $5,000, then another 7, then another 7 on that same person.
Final myth I want to throw at you. I need to document that each employee worked at least 30 hours a week.
No, that's irrelevant. So there is one test which is used to figure out if you're big or small. And the big or small threshold is 100 employees. A lot of salons have people that work less than 30 hours a week. And so I think every salon that I've worked with has ended up in the small category, and small means you get ERC. So small is good, but then you get the ERC on every single person, no matter how many hours they worked. Even the front desk person who worked 10 hours one week and then quit, like you can still get ERC for them. There's not going to be that much wages if they work 10 hours, but you can still get it on that person, whether they're full or part-time.
Perfect. So unlike the PPP, this is another thing to bring up here. Unlike the PPP, this won't go away. It's not like there's funds allocated, they'll run out. I mean, this is for everybody, basically.
Yeah, that's correct. There is no pool of money. You have 3 years to amend and claim the ERC. It can't run out of money. I don't think I would want to wait 3 years. If you're in line for a couple $100,000, the sooner you apply, the sooner you'll get your refund. But you do have time. It's not urgent. It's not like, oh my God, I got to do this next week. There is no strict deadlines on this. I think personally, the salons I work with, the goal is to get it done before the end of this calendar year, the end of December, because ERC is taxable. So the amount of ERC you're going to get for 2021, if that ends up being 100 grand, we want to include that when we're doing the 2021 tax planning. We don't want to wait 30 months, do it later, and then sort of retroactively owe the tax. We want to be proactive. So, it's not a do it this week kind of a thing, but I would say it's a do it this year kind of a thing.
So that's a little bomb you dropped there in terms of being taxable. So, for example, if someone gets, in your example, $150,000, then that's going to be considered to be taxable income.
Yep.
And I probably would put that, I'd probably put that in the other income on the P&L for reporting.
Well, so that's a good point. I think there's a difference here. I think for internal reporting and understanding what in the world is going on, I think other income is a good spot for it.
Yep.
That is not where it's going to go on your tax return. It reduces the wage expense on your tax return. So there's going to be sort of a book tax difference in where it's represented. But if you're trying to compare year over year, and then your wages get just wildly reduced by ERC, these comparisons aren't going to make any sense. So I agree. I think other income is a good spot for your internal financials. When it comes to the tax return, reduce the wages. It is taxable. That depends on your personal tax rate. The one thing I will add is that there are a few states that do not tax ERC. That is absurdly complicated to figure out in many states, but I will tell you that Minnesota is one of them where it is tax-free, but you have to be very specific. I know, we finally got something right. You have to be very sure and specific you're figuring that out on your Minnesota returns. Another big one is California, where it is going to be tax-free because it's called non-conformity. Which is complicated. There are a few other states, and then there's a few states that are on the fence about it. So be sure to look at the state, because if it's 150 grand, I don't want to pay Minnesota tax on that. That's throwing 15 grand out the window if you didn't realize it was tax-free.
A lot of tiger art. I had someone said to me, I'm really glad that we got into this topic today. And Carrie Bennett, holy moly, California got
I know, California
right.
and Minnesota, terrible tax states, but they got ERC right.
Well, you did not say this, so I'm not going to put words in your mouth, but somebody said to me they're surprised by the level of ignorance about this topic, and which is why we addressed it. I know we've addressed ERC in the past, but I really felt that it was timely for this group to bring this information. Chris, you and I can talk about a lot of other things, and you're an expert in a lot of other areas. Will you come back as a guest?
Yeah, sure.
I've got you. I've got some other topics for you in the future, so we'll have you come back as a guest. Any final words for the group before we give you a send off here?
I would just really encourage people to, I mean, look at ERC obviously, but do tax planning. This is perhaps one of the wildest years you'll ever have in terms of unusual tax events. And, I mean, there's a pretty good chance they pass a significant tax bill this fall, which is going to, again, change the landscape going forward. So be intentional, be proactive this year, more important than any other year. I mean, I think it's great every year, but if you're not going to do it this year, then, I think there's tremendous tax savings that can be had just from being proactive, doing planning this fall, for sure.
Are you game for helping any of these people that want to reach out to you?
Yeah.
Of course you are.
Yeah, of course.
Well, good. I hope some people reach out to you because this is amazing information. And given that you're really the guy in your firm, I mean, you have a team, there's a few of you that specialize in salons. You're able to navigate your way through things. I mean, salons are not very complicated from a tax standpoint, but to your point, so many people don't do tax planning and they miss out on major opportunities. So you did a great job of explaining this today. So thank you.
Yeah, no problem.
Well, Chris, we have a ritual here. We like to award you the $1 million light bulb and formally welcome you to our brain trust.
Thank you.
And then everybody's going to give you a collective virtual round of applause. So hopefully you can sort of hear the shaking through the pipe of the internet here. Sam is acknowledging you, and Jackie and Candace and Andrew. Who's Andrew? Hi, Andrew. As a fellow CPA, I totally agree. Please do your tax planning. So you got some great little comments here. Chris, we're gonna have you back. And woohoo, thank you. I love the comments coming in. So welcome to the roundtable. I've got another request for you. I'm going to call you right after this meeting. Right. But again, thanks for your generosity and sharing your wisdom, and thanks to your partner in crime, Scott Schneiderman. And we'll have you back. Okay.
No problem. We'll see you later.
All right. We'll see you later. All right, guys, I've got some other things for you before we wrap up today. So each week, I'm inspired to share things from you from our money course that to me seems timely and relevant. And this week, and this is from our money course, financial success training for students, soon to be available for your team. And myths and traps, we have a whole lesson on this. That is an area in this program where we get closure on different myths and traps. Just like we got closure on the myths and traps related to ERC, it's amazing myths and traps and how they prevent us from optimizing things. I mean, literally people leaving hundreds of thousands of dollars on the table because of myths and not taking action. So in the theme of closure today, hopefully you'll get closure on taking advantage of whatever type of relief is available to you, including ERC and other things to take advantage of. One of the things I want to share with you, going back to a theme about September being the second new year, is when we did this money course, we have a module that's just about planning, and we have a lesson on budgeting. And one of the insights that I've had about budgeting through the years is budgeting is a very triggered word. In fact, there's programs out there like budgeting sucks or don't budget, it's a waste of time, whatever. And we have a module that really looks at budgeting from a very different standpoint. And we call it everyday budgeting. And many members of your team, or you personally, or you as an organization, avoid budgeting because doing a full budget is very overwhelming. It takes a lot of time. But everyday budgeting is just recognizing that we budget every day. For example, we're going to budget how much money we put into a meeting that we're coming in September. We're going to budget how much we're going to spend for a new hire for a marketing position. We're going to budget how much we put into a charitable campaign. We're going to budget how much that we do in a build out. So budgeting is something that happens on a day-to-day basis, but we don't really think about it. And it also applies in people's daily life too. So anyway, just a few things here. I'd like to distinguish between a full budget, which a full budget, at least in a business enterprise, would basically mirror the P&L. So it would be forecasted revenues, cost of sales, operating expenses, and all the lines. It's a full budget. But everyday budgeting is much more pragmatic. It's day-to-day stuff. And so part of what we teach in this course is some basic math around budgeting a full budget, your money in, money out. This is whether you're an individual or you're a company. And really breaking down your money out as it relates to your P&L, or if you're looking at a personal budget, how it relates to things like shelter, transportation, food, education, savings, etc. And so a full budget, again, is something we actually teach it in the course. But everyday budgeting is things like budgeting for a vacation, a shopping trip, an educational course, and really breaking down budgeting down to like emergency budgeting and savings, budgeting your savings too for an emergency fund, short-term and long-term, and really breaking down between need to have and nice to have. And the other thing we teach is distinguishing between fixed expenses, which are going to be the same every month, whether it's a car payment or whether it's rent in your facility. Periodic is going to be seasonal, whether it relates to an annual insurance premium, or it could be an event that happens seasonally. And variable are things that are tied to revenue. So that also led us to doing a very quick and fun course on building a spreadsheet. So many people don't know how to build a spreadsheet, and spreadsheets are so pragmatic for so many different areas of our life, whether you're doing a everyday budget for a simple event like a build out or an actual event. So anyway, that is another module we have in the course. So anyway, what will your money story be? And we're looking for people to share their money stories with our curriculum. So, all right, before we wrap up, Qnity in action. If you are not working with a coach, the second new year, September is a great time to look at that. You can reach out to Aaron to learn more. You can go to our website. We shared some great examples last week, including from Michelle. I think, Michelle, you're on our call today. She got a great coach, Carrie Perkins. By the way, Carrie is going to be my guest on the school roundtable. We're going to go through the 3 C's. Michelle had some amazing results. And one of the things that we do is we do a gap analysis. We do before and after rankings in 5 key areas where success is needed. So anyway, you can book a free coaching session. You can use the QR code there. We also have our trainer certification. I think we're just about ready to close enrollment for that. That's coming up in Denver. This would allow you to bring the Qnity curriculum, including the 3 C's that we went through, to your team. And anyway, and then 2 to 10, super excited about 2 to 10. Looking forward to seeing many of you there. And is registration full? That's a good question. I got to check on that. I think we're pretty much right at full, but if you had an invitation and you haven't responded yet, check with us to see if we still have your spot for you. And we also have our emerging leaders that are part of 2 to 10. So if you signed up for 2 to 10 and you want to be part of our emerging leaders group and you're over 35 or you're a leader and you know someone in your team that's of that group, they should be part of our emerging leaders group. So anyway, we are going to be off next week. We're taking a week off because it is right after Labor Day. It's a holiday. In closing, all progress starts when you tell the truth. Next week, this weekend, will be Shorty's Hot Dog Stand in South Dakota, our last year. We're going to tell you a little bit more about that next week. We're going to share some stories and have some fun. So we'll miss you next week. Actually, so it'll be 2 weeks out. we'll give you the story of Shorty's Hot Dog Stand, which is a business that's been in our family for 95 years. And this is the last year. All good things must come to an end. So guys, let me see what else we have here in the chat. And let me also see who is on the call today. Hello, Amanda and Andrew and Ashley and Candace H, Carolyn, Christine, Dawn, Ginger. Hi, Jackie, James, Joe, John, Julia, Karen, Carrie, Kelly, Laura, Leah. Hi, Leslie. Hi, Linda. Hello, Linnell, Mark, Marcia. Good morning, Megan, Melissa, Melody, Michelle, Sam. How you doing, Sam? Sam Johnston also, Tracy and Trent. So what's in the chat here? Was who wants to have a hot dog served by Tom? You'll have to go all the way to South Dakota to get a hot dog served by Tom. So anyway, Huron, South Dakota, that's where we'll be next weekend. It's a great story. And you guys all take care. Let's see if there's anything else in the chat. Michelle, thank you for putting the link in there for School Roundtable. So, all right, guys, thanks for joining us today. Thanks again, Chris, for being part of this. And thanks, Scott, for making the introduction. And you guys all take care. Bye now.